Hello. Thank you so much for tuning in. Appreciate it. Before beginning, I just want to know if you guys can hear me properly and if the audio is proper so we can go ahead and start with this session. Welcome, Noah. Welcome, Paul. Welcome, Eric. Thank you for joining. So, can you guys hear me properly? Is the audio clear? Right, so if everything is proper, let's get things rolling. So, how did you guys do today? How was today's session? SPY was down pretty much, and QQQ was down pretty much like a lot, and the futures are trading a bit down as well. Like they're down like 0.2% here. So, leading into today, in this stream, I want to talk something about a new concept called relative strength. So I'm seeing a lot of people buying the dips on stocks like Apple, Amazon, Google, when it's down like what, 20% in the last 1 week alone. Hey, Alva is here. What's up, Alva? Welcome. So we're going to go over something called as relative strength and what it is, and why it will be better to buy stocks with the relative strength instead of bottom fishing on stocks that are down like 20% on this week alone by offer some great risk to reward. So I'm not talking about RSI, which is the relative strength index. That's not what it is about. It's just a concept called relative strength. So technically what we're saying is if the market is down like, let's say 3% like today, 2.5%, like 3%, there will be some stocks which will be outperforming the market. And I mean, it'll be surprising, but some stocks actually like hit all-time highs in the last 2 weeks. Let me show you an example. Check this out. This is Amgen, AMGN ticker. Check it out. A new all-time high, new all-time closing highs, like last week. And this week they hit a new all-time high at 274. Right now they're still above their previous all-time highs. And what else? MRK, another stock, a new all-time highs, still holding above it, still holding above the price. And what's the other stock? McDonald's, another stock, new all-time highs, holding over there, about 270. So the example of relative strength. So why does these stocks push to a new all-time highs when S&P 500, Nasdaq is down in the dumps? That is where the relative strength comes in. So if you are buying the dips on stocks, these are the type of stocks which you should be buying the dips on, and not the stocks like, where is it? Nothing on this list. Nothing. Look at this. Apple down from 154 to 138 this week alone. Amazon, look at this. For the last 2 weeks, it went down from 121. Right now, it's trading at 89. And there's still a lot more downside to follow. Google, 105 to 83. Meta, 137 to 88 in the last 2 weeks. So, the best thing for you guys to do is, if you're buying or if you're trading, the best thing to do is look for stocks like McDonald's, look for stocks like Amgen, look for stocks like anything on the Dow 30. It's actually looking better. Like IBM is looking decent, but not so bad. But not as good as compared with McDonald's and other stocks which I mentioned before. TRV is looking good, which is sitting near the all-time highs. So this is called relative strength, where like you just like look for stocks which is near the all-time highs or above and trading near the new all-time highs. There are different ways of trading, and this actually been worked out pretty good. Some people actually short the names because the entire market is in a bear market, but these stocks can't sustain the higher prices. But well, the problem with that thesis is if the market goes down, they won't go down a lot. Look at McDonald's, for example. The market was down like 2.5%, almost like 2% today. Look at McDonald's. They opened lower today, but look where they closed. They closed at the highs. They closed at the highs of the day. They were up like almost 1%. When the market pushes up, this is going to double down and push up even further. They are actually flagging in the daily time frame. If they break out of it, this is going to go probably to 300. So it's very much likely. A lot of people want to talk about PE ratios. A lot of people want to talk about the valuation. Well, it doesn't matter. You got to be in a place where the buyers are. Simple as that. So this is where this is what we are talking about. So focus on the stocks which are outperforming the markets. This is a stock pickers market. You got to be in the place where the buyers are. So there is a saying, right? There is a bull market somewhere. If you want to short, the best place to short is the stocks which is like Apple, Google, Amazon, the tech. The Nasdaq is looking like shit at the moment, not gonna lie. Absolute shit. This is NQ. You can see. For the last few sessions, they're poised to make a new low. So why will you long something like this instead of stocks like whatever I showed before? Last month, if you go to the monthly candle, look at Dow Jones. This is YM. The lows of the last month was 28,650. The highs of last month was around 32,000. 33,000 actually, that's the highs. So it was more than 4,000 to 5,000 point move. So people are so fixated to 2 or 3 stocks which they trade, they forgot to like widen their horizon to take a look at stocks which are actually outperforming the markets. So instead of buying the dip and the downtrends, focus on stocks like which is showing relative strength to the markets. Never say it can't go higher anymore because the market is down. You're wrong. It can. Same with the opposite. Don't say that it can't go any lower because it can. It's a possibility. Look at Meta. At 130, I've seen a lot of people say like it can't go any lower than this. Well, right now it's trading at 89. Look at Baba, for example. Another great example is Baba. They've been saying it can't go any lower since 200. Since it was trading at 200, people are saying, nah, it already bottomed, it can't go lower. Right now it's sitting at $65. Square is another example. People said it can't go lower since 130. Look at it now, 53. PayPal, another example. People say it can't go any lower, bro. Since 180 I've been hearing this. It is at 76. Downtrend stocks are going to be in a downtrend for longer than you actually expect, and you will see the prices going much lower than you actually expect. So always expect lower prices in the stocks which is in a downtrend. Expect higher prices in the stocks which are actually uptrending. So I mean, for McDonald's, if you go short here, where will you set your stops? If there is a trade, TLT can go lower. Yeah, of course. Like the TLT, like what Alva is talking about is the bonds. TLT is the 20-year treasury bonds. It does not look good. I mean, there are certain places where you look for the fundamentals instead of just technicals alone. Technical says TLT can go much lower. Yes, it can go much lower. But fundamentally speaking, let's say tomorrow Fed shows up and says like, oh, we're going to pause, we're going to pivot. Well, if that happens, we'll see something like this on TLT. Well, that doesn't explain in price, but no one could have expected, but you'll see something like this. Whoop. It'll go back straight above $100 tomorrow if the Fed comes up with a pivot, but it's not going to happen. But it's a possibility. It's a possibility because the bonds move with the Fed, whatever the Fed was saying. Whatever the Fed is saying, if they are increasing the interest rates, yields are going to go up, which will bring down the TLT. If they start easing up, if they start reducing the interest rates, or if they slow down on their pace of raising the interest rates, yields will come down, TLT will start pushing higher. When do you think the turnaround will be? Well, I don't know. That's the right answer. I don't know when there will be a turnaround because we can very well keep pushing lower to make new lows in Nasdaq, and we can very well keep pushing lower to make new lows in S&P 500. It's a very likely possibility. So the best thing for you to do is, if you're short, keep lowering your stop losses in your puts, or keep rolling your puts outside because the dominant trend is to the downside. Stop messing around with 2-day expiration options, because I've been seeing a lot of this in the Chris Saints Discord in particular. People are so addicted to this 2-day expiration options, and then like people are so addicted to this in and out scalping. Why are you scalping if you don't know technical analysis? What are you doing? Manage the risk, because some of the screenshots which people send me about their profit and loss, just absolutely unreal. Down $40,000, $50,000 in like 2-day expiration. Like 2-day expiration options in SPY, only trade it if you're experienced, only trade it if you know the price, only trade it if you know what you're doing. Even with the weeklies, never do it. You don't have to trade every single day. You don't have to be in the markets every single day. You can be in the markets and analyze what's going on with price action, but you don't have to trade every single day. There are weeks which went by without me trading because I couldn't find a good setup. It's fine. It's okay. You don't have to trade every single day, and yeah, reduce the amount of trades you take. You will see a great outperformance in your portfolio in a matter of months. Trust me. Hi Mario, just hopped in. Not sure if you already covered, but wanted your input on Meta. Do you think we're near a bottom? Yeah, I was just talking about it. Always expect lower prices in a stock which is in a downtrend. Don't try to buy the dip, because who's gonna tell you that? I mean, Meta can very well go to $40. What's the IPO price for Meta? The IPO price for Meta is at around 42. Who says that Meta can't go down to 42 bucks? 42 bucks possible. I mean, it can sound outrageous, but it's very possible. If they're not going to show results, trust me, I love the technology. I've said this multiple times. I love the technology. I love what they're doing, but it doesn't matter what I love. It doesn't matter what I think. The market's going to do what it's going to do. So if you believe in a company or whatever it is, like, wait for them to show some actual result in the company wise. You can believe in someone, and that someone can be an absolute prick, right? Just like that. Like, you can believe in a company, but if they're not showing you the results, which they're not at the moment, what's the point of putting your money in there? Nothing. I love Meta. I love their technology. I love what they're envisioning. I agree with it. I can see that being a future in the next decade. I can see everything in VR. It's very much possible. But for now, there is nothing to back up my belief, or nothing to back up my vision, or whatever it is. They're not doing much. They're just spending billions and billions of dollars, but not showing enough result to back it up. So until you see it, hold off on Meta, because there is a very high likelihood for this to keep pushing lower and lower and lower for every single bounce, and you don't want to get stuck with this. So be very careful. Most of the people lose money on weekly options. Absolutely. I 100% agree with this. You either trade, like, the main point of options is to de-risk your long-term positions. Let's say let's just assume, let's take Meta as an example, because we've been covering this for a while. So if you're buying 100 shares of Meta at $88.78, let's just say you get 100 shares of Meta at this price. The purpose of options is to reduce the risk of your long term. So what people usually do when they buy the 100 shares of Meta, they get the puts. They get the in the money puts, which expires like 3 to 4 months from now on, right? 3 to 4 months from now on, buy like $90 puts. That is de-risking. If Meta goes down further lower, and let's say it goes to 40 after you buy the 100 shares, what people usually do is they will just, like, at the expiration date, they will just exercise that $90 put, so that they can get rid of those 100 shares at $90 cost basis. This is the main purpose of options, de-risking. So always make sure to know what's the point of options are before just gambling on weeklies or gambling on 2 day or gambling on especially days like tomorrow. Oh my god, they have a name for this. What is that? Lord of Friday. Like what the hell is that? So I mean you can scalp options once you know what you're doing, but until then be very careful because this is not a beginner friendly market and this is not the market where you scalp. If you made money, that's good. Now it's your time to protect those capital. So if you're gonna add to long terms, like always buy a put as a hedge, especially in a downtrending stocks. For example, especially stocks like Meta, Google, or Apple. If you're buying 100 shares, always buy an in the money put for protection. I mean, you're spending like 8 grand, like more than 8 grand for buying 100 shares. Like you can spend like around like 700 $800 as a protection. It's like an insurance. Like for a car, you're spending like almost 60 $70,000 on a car. You pay for insurance on a monthly basis by spending $600, right? Just like that. How is it any different? If it goes down, your puts will save your ass. If it goes up, your long-term shares will save you. So it's a win-win. So always make sure to protect your positions to more downsides, especially if you're bottom fishing. Or if you're not going to do it and if you're going to leave your positions overexposed to the downside, well, you're going to see the effects. I mean, if you're doing this until now, you must have already seen those effects on your portfolio. I saw a guy texting me about asking for what to do when he has the cost basis on SQ at 225. What can you do right now? You have a cost base of 225 in a stock like SQ and it's currently trading at $60. Is there any certainty that the stock will go back up to 225? Absolutely not. I can give you like 5 to 6 stocks on top of my head which never hit the all-time highs which it made at 2000. I mean, the year of 2000s after dot-com crash. An famous example is Intel. Intel is a very famous company. If you bought it at the highs of like, let's say 2001 or something, the stock still never got to the same highs. You can see here, the highs which it was made, all-time highs for Intel is $75, which was made on September 2000. Where's the price at right now? $27. If you bought it anywhere over here, you're stuck back holding this forever. It's not worth it. If you factor in inflation, it's even worse. You're losing like shit tons of money just by holding the stock. It is a good company, yes. It's actually a behemoth of a company, one of the biggest, yes. But the stock price didn't do anything. What's the point? You're not getting any return in your investment. Did anyone ask about Amazon yet? Just joined live. All right. So Amazon, yeah, it's the same principle. It's the same thing what I said about Meta. If you're going to go long on Amazon, always buy an in the money put expiring at least like 2 or 3 months out as a hedge. Especially if you're buying like 100 or 200 shares, always have a hedge. If it goes up, it's fine. Your puts expire worthless, but your long term, your 200 shares will actually make you money. If it goes down, well, your puts will actually cover and protect your losses which you will be incurring in your shares. Something to keep a note on. Don't trade penny stocks either, guys. It isn't worth it. Exactly. Like, I've seen a lot of people going heavy on penny stocks because it's like an easy or quick money scheme. Nope, it's not. It is not. I mean, unless you have a proper risk management, don't trade anything. Simple as that. Risk management is I mean, I don't want to come off too negative. I can see how I'm sounding like. It's been like, don't do this, don't do that. No, but the point is, I've been seeing a lot of screenshots lately about how much people are losing. So if you're one of them, please take this as it's not an advice technically. You can do what you want, but please think about it. If you are losing money until now, and if you keep repeating the same thing, whatever you're doing over and over, how are you expecting to get different results? There's something needed to be changed and you know it, but you still repeat the same mistakes over and over, expecting a different result. It doesn't work like that, right? So there's something called as risk management. We will cover that in this stream as well. So with Amazon, it can very well go all the way to $82, or it can breach $82 and go all the way to $65. Who knows? Very much likely. Always expect lower prices in the markets that's been downtrending. Always. So if you are gonna buy the dip, I mean, every trader, every investor have their own mindset, have their own thesis at the end of the day. All right, there is no rights, no wrongs. I personally wouldn't buy Amazon, but there will be like millions of people who disagree with me, and then they'll say they will buy Amazon at this prices because they like it. Doesn't make them wrong, doesn't make me right, or vice versa. But if you're gonna buy it here, have a proper risk management. Don't just buy and hold, like Amazon will go back to like all-time highs pretty soon when the market recovers. You don't know that. I mean, Cisco used to be one of the leaders. Cisco, one of the biggest companies out there. You want to know something fun? The highs was made at 1999, $82. One of the biggest companies out there, 2000s, $82. Look at where it is right now, 43. Not all the stocks get back to their all-time highs. SPY does. I mean, from 2000s to right now, you can see what SPY is doing. SPY always goes up. 2000, what happened? You can see clearly over here. 2000, the SPY was trading at $153. SPY always goes up. QQQ always goes up. Indices goes higher. Individual stocks, nope, they won't. Not every single one of them. So if you tell me like the stocks like Workhorse, WKHS, if you're gonna sit there and tell me that stocks like Workhorse is gonna go all the way to $42 again, what's the probability? What's the probability of that? You tell me. It's at $2 right now. It's like almost 1,500% move to the upside. Do you think it's going to happen? Probability is very less. If you bought it here in Workhorse at $17 or $18 and you're still back holding it, you need to work on your risk management. Simple as that. Either you are wrong or the market is not seeing something which you're seeing. If that's the case, you should always assume that the market is smarter than you. Simple as that. But why is the stock pushing lower and lower? I've seen a lot of arguments like this. This is the future. This future is in the stock. The market is just not seeing it yet. I mean, yeah, there might be some stocks. What research do you have? This is about the beginners who are just entering the market. And you seeing some articles and reading some articles about this company is not you doing research at the end of the day, if you think about it. It might be the future according to the person who wrote the article, but that's not a gospel. So penny stocks are extremely tough to predict from the technical standpoints. Low volume, so areas of support and resistance don't act as such. Exactly. That can be said the same for any stock which has been trading in a low volume. There is like an absolute scam which has been also going on with these penny stocks, especially because it's easier to move. You can see this in crypto, to be honest. Like when they release a new project, some assholes will load up before telling the people to buy, especially in the Discord groups. So when a bunch of people buy after him, the stock will push higher. So he will get out for a maximum profits, leaving the others back holding. So the low volume stocks or low volume tokens are easy to push to the upside. And when the whale actually dumps it later, results in a massive downfall. So be very cautious while trading any penny stocks, anything. At the end of the day, it's not the market that is rigged, it's just us who are stupid. Simple as that. So like people complain that the market is rigged, market is like this, market is like that. Yeah, it's been like this all the time. There's no point in blaming the market. The only person to blame is our own self, if you think about it. I mean, there are a lot of mistakes which we did until now could have been avoided pretty easily. It's not something which is unavoidable. Like buying AMC at $40 and still holding. By buying GME at like $250 and still holding. For what? Sticking it to the hedgies? Nah, the only person you're sticking it to is your own self. So if you're new to the markets, there are a lot of things which you need to focus on. The first things is risk management. Don't trade weekly options if you don't know what you're doing. Stop listening to some basic call outs which is made on the Discord server blindly without knowing what you're doing and then entering and exiting based off of what the other person says. It might sound good right now, but in the long run, it's not going to help you. Especially in this market conditions, like when the volatility is higher, like if you traded in 2020 or 2021, SPY doesn't move like this. Like volatility never went higher than 20 or stayed above 20 during 2020 or 2021 in particular. I'll show you the VIX. So this is the entire 2020 and 2021 range, right? We did have some pop here and there, and this is like after the COVID, right? Like after the COVID, we had some massive spikes now and then. Let's go to 2021. The VIX settled between $14. We had some spikes all the way to like 28, but always stayed in the range between like 14 to 20. So when that happens, you don't get a lot of moves in SPY. You won't see a big move in QQQ. I mean, QQQ doesn't work with VIX, but still, you get the point. But right now in 2022, VIX is just stagnant between like $30 to like 20. So the SPY is even more volatile. One, and QQQ, is you look at VXN for QQQ, still you get the point, even more volatile. If you are a new beginner and if you're trading SPY or QQQ, you can easily, like, your option contracts will turn into a penny stock in a matter of minutes if you don't manage the risk wisely. I mean, I've been saying manage the risk. What do I mean by that? Okay, let's say like your account size is $2,000. I mean, the members of the Patreon already know this. We already spoke about this. But if you're new, you can just list like this is how it goes. If you have a $2,000 account, right? While taking a trade, you only risk 1.2% of your entire account in a single trade. Not more, not less. So if your contract goes down 1.2% of your entire account, you get stopped out. So for a $2,000 account, 1.2% will be $24. So if you get an option contract and you're down like $24, you get stopped out. Doesn't matter if it goes up later. You shouldn't care. Doesn't matter if it goes up later in your direction after you're losing $24. It doesn't matter. Your plan is $24, 1.2%. That's the 1.2% of your account. $2,000, $24. That's it. If it goes down $24, you cut the losses and you look for a re-entry later. And let's say you re-enter again and then you get stopped out again. So you lost $48 for the day and that's it. You stop trading for that particular day. Done. The maximum you can lose on a particular day on a $2,000 account is $48, which will be 2.4% of your entire account. And let's say like next day market opens, you start trading again, and then you lose 2 more trades consecutively, right? So what, 24, 48, and you lose $96 in 2 days. $96 in 2 days, and you stop trading for the entire week. Let me tell you what will happen if you don't. You lose $96 in 2 days, right? What will be your mindset after that? Oh shit, I lost $96. I have to get it back. So I'm going to take this trade. If I take this trade, I will get it back. Nope. That's a gambling mindset. That gambling mindset, it's going to make you lose even further. This is where the discipline comes in. If you lose in 2 trades, you stop trading for the day. If you lose in 4 trades, you stop trading for the week. It's fine if you stop trading for the week. There are always opportunities around. Just because you missed out on 1 day of trading SPY doesn't mean you'll become a millionaire the next day. There'll always be the same price action, which will be coming around the next week, the week after. Stick to the discipline. This is the system. Never lose more than 1.2% of your account in a trade. And if you lost like 2 trades consecutively, stop trading for the particular session. And if you lost like 4 trades consecutively in 2 days, stop trading for the entire week. Take some break, refresh your psychological state, and then come back after a week to start over again. It's fine. In that 1 week, the break which you're taking, it'll help you to understand and analyze where you went wrong. You write it down, whatever you went wrong, you write down in a piece of paper, and then like you analyze it, which helps you get better in the upcoming days. That's all it is. That's all you need to do. Just like have a discipline. When I say like have a system, have a risk management system, this is what I meant. This is the discipline which you need to have if you're a trader. You don't have to trade every single day. You won't find the same setups every single day. That's how it is. I have seen people who have like not traded for like 3 or 4 weeks straight, and then like they'll see a good setup, they'll hop in, they'll make like 200-300%, and then just stop trading for the month. Ask any experienced traders, they will tell you the same thing. Over trading is one of the biggest problems for beginner traders. I've seen a lot of people asking how to get around the pattern day trading rule. The pattern day trading rule is there for a reason. It's for your protection, so that like you don't overtrade and lose more. So because like 25,000 and less, you're classified as a beginners in all the brokerages' eyes. So they have this 3 day trading rules to stop you from overtrading. But people found a workaround. They turn it into a cash account, which makes them to overtrade again, only to lose more. Changing the cash account to margin account doesn't make you a better trader at the end of the day. It just fuels the habit of overtrading. And no professional trader gambles on earnings. Actually, yes, that is true. Great info. Can you give an example of a setup you like, or look for example charts? All right, I can show you. Let me talk about the place which I took today. I took 2 trades today. One is puts on NEM, and I retook the longs on McDonald's, MCD. So I'll tell you why I shorted this at the open. So, okay. It's pretty simple, right? If you have charts, you can just open your brokerage and you open your charting software and you can just follow along. So let me remove all these indicators on all these lines and everything, all right? So if this is the daily charts of NEM, you can see that for the past, how many days? For the past 2 months, the stock has been trading in a range. The range is between $40.50 all the way to $45 to the upside. All right, it's just an approximate estimate, but you get the point. So they've just been trading in a range between $45 to $40, back and forth, back and forth, back and forth. What happened yesterday? Look at yesterday's candle. They had earnings. The candle close was under $40, the lows of the bottom of this consolidation range. So something to keep an eye out for. Every time you see a stock consolidate for a brief period of time, and then it breaks down under, the reaction is going to be accelerated to the downside or to the direction of the side at which it has broken down to. Let me tell you why. If you are bullish in the stock, all right, so what do? Every time the stock hits this level, you buy calls or you buy shares, you go long, all right? It pushes up, and every time you are a seller, if you're short on the stock, every time it goes up to $45, what do? You short the stock and it goes down. So the bulls go long over here. By going long, I mean buying, right? That's what long means. Going long means buying, and going short means selling, all right? The bulls of NEM, what they do, every time it hits $40, they buy, they buy, they buy, they buy. And at 45, the bears will be like, they'll sell, they'll sell, they'll sell, and they'll sell. So this has been like a tug of war, which has been going on. That's why the consolidation actually happens. So it's a tug of war between buyers and sellers until one side actually breaks. So what happened yesterday? Buyers lost and they broke and closed under the $40.50. And the next day you saw what happened. So when this happens particularly, everyone who bought here, right? Like the buyers who bought here, second time, third time, everyone who went long, the longs of NEM in the bottom of the consolidation range, they will start to sell because their stop losses will start kicking in because the range has been broken and the bears have taken over and they won. So that will cause the amplification to the downside. You'll see the selling pressure getting amplified once the stock consolidation range has been broken in the direction of the bears. So that's exactly what you saw over here. So yesterday they broke under. Today you saw the continuation. That's the main reason why I went short as soon as the market opened. So I went short at around like $39 at the open, and I'm still holding on to this. This is one of the plays which I took, and that's the reasoning behind it. So if I put on the support and resistance levels, you can clearly see. So $40.10 to the downside and $44.95, $45 to the upside. They broke under it yesterday, and now they went all the way down to run a test to $37.50, which is the next support level to watch out for. Will this hold? I highly doubt it. So if you haven't went short here, the best thing, what the other people usually do, if people usually buy long here, it always goes back up to run a test to this area. It gets rejected and then comes back down again to the next level, 37, 36, or all the way down to $34. So if people missed out on this break, like whoever got stuck over here, usually exit over here at around $40 again when they run the test back again. So if you want to go short again, this is your level to go short on. If you didn't go short today, you can go short over here at the break with stop losses at closing candles above $40.50. So this is the reasoning behind why I took this trade. It was like too good of a risk to reward to not take it. I shorted today morning with the stop losses $40. So technically, I risked $1. By risking $1 in the sense like I entered the trade at around like $39, and I would have gotten stopped out if it closes above $40 or $40.50, all right, which will be like almost $1. And my goal was to take profits at around 36. I cut like half of my holdings by today's close, and I'm still having a few more shorts on this trade, and I will cut it when it hit $36.85 in the morning. So this is the plan for this. So, and that's the reasoning behind why I took it. So it's not just because like it's down in the pre-market, so it has to go down further. So I had a thesis, and this was the thesis behind, and it worked out. And will it always work out? Of course not. I don't know what's going to happen the next minute. No one does. But it's a high probability trade, and it worked out, and it's a decent risk to reward. Simple as that. And then other thing which I did today was McDonald's. And this was a roller coaster, to be honest. It tricked me in the morning. Let me be totally honest. So what happened today morning was like, you can see it in the charts. I had longs before. I had calls and shares on McDonald's at 270. So my plan was to like when 270 breaks to the downside, I'll get stopped out. So today morning, that's exactly what happened. So they broke under 270. I got stopped out on my long position. So what I did was I took shares at the rejection of 270 again, and it went all the way to 268, and then it pushed back up and recaptured 270 just like that. So I got stopped out on my shorts, I got stopped out on my longs. So once it broke 270, I had to re-enter my long position again, and now I'm back and I'm still holding on to this long position. And the reason for this is, if you're in the stream from the beginning, we were talking something about relative strength. That's the main reason why I'm holding McDonald's at the moment. When the entire market is down like what? This week alone, the QQQ is down like more than 7%. Look at McDonald's, still up. Flirting, bull flagging near all-time highs is what's going on. And now, if they broke above this range, which is at around like 274, this can easily break above and go all the way to $280. And if they break under, we will talk about it later because we don't know. If it breaks under 270, that's a totally different scenario. Tomorrow is a weekly candle close, so that'll be a telltale sign. If it closes under 270, I'll get stopped out for a small loss. If it stays or breaks above 276.53, marches towards 300, look at the risk to reward there. So I have like long positions on McDonald's and short positions on NAM. Those were the two trades which I took for today, and that's it. Nothing else, nothing more. And that's the reasoning behind it as well. Relative strength is because like McDonald's reached to a new all-time highs last week. This week they are holding, they are consolidating above the all-time highs, building up energy for the next push higher. Well, can they break down? Yes, I'm aware of the breakdown scenario as well. There is an equally potential possible scenario for McDonald's to break down and lose the all-time highs. Yes, there is. But if it did, I'll get stopped out for a small loss. If it didn't, it's a great risk to reward to the upside. So I like this trade to the upside till now until 270 holds or 268 holds if you're willing to take more risk. So today's low is at 268.42. So until 268.42 holds, well, I'm staying long. So these are the two trades and the reasoning behind. Please stay away from shitty stocks. Let's see Peloton, what's going on in there. Oh my god, $9 fucking. Jesus Christ. Yeah, stocks like this company is absolutely dead, isn't it? Like, what the fuck? From $170 to $9, absolutely insane. I don't even know what's the trade, how where's the risk to reward on trades like this? Like, what do you do in these types of stocks is short every single bounce you see. Simple as that. Easy money. Short every single bounce. It can't go any lower. Well, it can. Like, I've seen people say the same thing over here. It can't go any lower, $80. I saw the same thing. People say over here, it can't go any lower, $25. Same thing over here. It can't go any lower, $14. Right now it made an all-time low of $6.68. Is it too late to buy? You mean, I think, Noha, you mean McDonald's, right? Nah, if you want to buy McDonald's, your stop losses should be at 270. If you can get it at 270, it's even better. And if you can get it 270 to 274 is the range for now. If they break under it, well, tough luck. We were wrong and we can get stopped out for like $1 loss. Happens. But if you're right, and this goes to like, let's say like if it breaks out of this bull flag pattern and then goes all the way up to like 280, 290 to the upside, absolute banger of a trade. I love it. Same with Roku as well. Exactly. Look at today, like is it an all-time low? No, it's not all-time low. There's still time for that, I guess. They saved it today. Like you'll see price actions like this pretty common when the stock makes a new low, new 52-week low. They'll just buy and buy and buy and push it all the way up. It happens. Like, don't worry. Like, they will just like consolidate around and then push lower, slow bleed to the downside. By the time the next quarter earnings comes, they'll be at somewhere around $28 to $29. Don't worry about it. Can you talk about Tesla, please? My average is 266. Tesla. Well, another tech stock consolidating in a bearish flaggish pattern in a daily time frame. If they break under 207, they can see 200 again, and they break under 198, they can go much lower all the way to $180. You're gonna ask yourself, what's your risk? I mean, like, if your cost basis is 266 to the upside, are you having enough shares to sell covered calls like Alva does? His cost basis is somewhere around like, how much is your cost basis, Alva, in Tesla? I think it's around like $20 to $30. He's been holding Tesla for a long time. So 206 might be coming up for Tesla. Exactly. Very much possible. 206, if they break under, they can see like 200. So, I mean, if you have enough shares to sell covered calls, I mean, you can do it. You can sell the covered calls for 270 strike, like an year out, like Alva does. He always goes for like an year out, and he gets like insane amount of credits. Like what? He sends me a screenshot saying that he got paid like $12,000 as credit for selling Tesla covered calls. And the next day he will say like, yeah, I just made like $3,000. I was like, motherfucker. Yeah, his average is like $88, correct. So yeah, you can try to sell covered calls. And if you don't have enough shares to sell covered calls, please manage the risk. Don't be in how to tell, like, I don't know how to put it in words, like, don't be overconfident saying that it can't go lower. Be open for all the scenarios. What do you do the next day you wake up and the Tesla stock is at $180? You can't do anything. So there's nothing you can do at the end of the day. So just like be aware of all the scenarios, be open to all the different possible scenarios. Never be stuck to the scenario that it can't happen, it won't happen. Well, it very well can, and it very well will. So just manage the risk wisely. That's all I can say. It's your portfolio. I don't know why you got it at 266. I don't know your thesis behind it. So I don't know Tesla as a company as much as Alva do. So I don't want to talk much about it. And depends on your risk level at the end of the day. Can you talk about SoFi? SoFi. Oh my days, it's just like consolidating, isn't it? Like every earnings they give a pop and then it immediately gets sold off. It's sold off on the same day. Jesus. All right, so far it's pretty much clear, isn't it? Like $4.85, and like yeah, $4.77 is the lows, and yeah, the chart is absolutely broken. They can see much lower prices. If you want to go long at $4.77, that's your risk level. You can go long at 477 by setting your stops at 450 or something. And if it breaks down, you can sell it for a small loss because the new lows might be right in the corner. This is the definition of falling knife. When they cut and make a new low here at $4.85, then yep, there's no support underneath. There's no way of telling how low this can go. So especially if you have a cost average of like $8 or $9. I know a lot of people with a cost average of 13 or 14. So if you belong to one of those, then like yeah, consider managing the risk. That's all I can say. Especially if it breaks under $4.85, like we can very well go to like $3. We can very well go to $1. It can go to 50 cents. We'll never know. You can never say how low the stock can go at the end of the day. So always expect lower prices in a bear market. Always expect lower prices when the stock is in a downtrend. SoFi is losing money left and right, but revenue growth is very solid. Well, I hope it's solid enough to maintain the 450 price. Because if they lose it, doesn't matter how solid it is, they're going to make a new all-time low. Love the comment about 1.4% of your total folio. I mean, yes. It's all about the risk management. It's all about the discipline. If you don't have it as a trader, it's going to be very difficult to make money, or it's very difficult to not only make money, it's very difficult to keep the money whatever you made. Because if you are one of those, you must have been in this scenario at least once, especially if you're a beginner. Like you will be making like thousands of dollars in 1 week, and the next week when they open up, you'll lose one trade and you'll lose like $200. And then you'll be like, oh, okay, I still have like $800 cushion. So the next trade you trade, you lose. And you lose another $200 on that one. And then the next trade, you'll be like, oh shit, I lost $400. I have to make it back. And then you go absolutely wild in the other trade and then lose the completely $1,000 to go flat for the next week. So the main problem which I see from the beginner traders is to like protect the capital whatever they made, especially people with a small account. If you have like a $500 account and then you made like $1,500 1 week, most of the people will just like completely lose their heads and then start risking like money which they shouldn't risk and lose that 1500 whatever they made the next week to bring their account back to 500 again. So if you have a small account and if you made a big amount of money, always consider paying yourself, transfer some of the money. Like if you made 1500, transfer at least $1,200 back to your bank account and then treat yourself. You don't have to put it in your brokerage, so you have to keep trading with it. Take the $1,200, put it in your bank account, keep the account, like grow it gradually. If you have $500 account and you made 1500, take the 1200 and keep the 300 over there. So now your account size is $800. And now the next week, if you made like $300, $400, take like 200 out. Now your account size is at $900. Always pay yourself. It doesn't matter what your account size is. All it matters is how you manage the risk and how you manage your portfolio. You can get lucky once or twice, but once you got lucky, make sure to transfer everything to your bank account and stop trading with the money, whatever you made. Like luck doesn't hit new beginner traders every single time. But when it hits you, just like make sure to secure the bag and walk away for at least like 2 or 3 days. Don't overtrade and lose the money which you made. It's me he's talking about me. It's not just you, man. I've seen a lot of people do the same mistake. I've seen screenshots of people saying like I made like $3,000 this week, and then the next 2 weeks later they'll post a screenshot and their account size will be at the same place. And I ask them what happened. They'll say like, yeah, I overtraded and then I lost the money. Happens, not just you. That's why I'm saying, like, if you made big amount of money which you never made until now, or like it's something kind of new and you're like totally ran with the adrenaline rush in your head, you're like, oh shit, I made this much money. There'll be instances where you made so much money where you can't believe your own eyes. Still, if that's the case, just like take all the money out, log out of your brokerage, and then enjoy the weekend. Enjoy the rest of the week with the money whatever you made. You don't have to trade every single day. Tip: put money aside on a monthly basis in order to pay taxes based off of your monthly profit. Don't let it accumulate. Exactly. The last thing you want to mess around, last guys you want to mess around is with the IRS. Always pay your taxes. We used to have this guy called Cookie, username Cookie in the server. Man was moving mad. Like he used to be sending screenshots like he made like $30,000 every single day, $40,000 on every single day. And then like he texted us with this thing that he got a bill from the IRS that he has to pay like $80,000 in taxes alone. Like, yeah, don't be in that situation. If you made good money, that's good for you. But always make sure to pay our guys at the tax IRS, the scumbags. So guys, if you have any other questions, let me know. So tomorrow morning we have non-farm payrolls, by the way. The employment numbers will be out tomorrow morning. It's another coin toss event. So the markets will be looking for people to lose their jobs. It's not even a joke, that's what it is. Market needs to see an employment data where people are losing jobs so it can push higher. If we see another strong labor market data, which it automatically means Fed needs to double down on their interest rate hikes, markets will start pricing in 75 basis points. Well, that's the case, then it's not going to go well tomorrow. We might see an ugly close on the weekly candles. Nasdaq might print a new low. Dow Jones is not already looking too good here, and we might see more downside to follow. Is it a good idea to sell puts on Tesla right now? Well, by selling puts, you're going bullish. By going bullish on stocks like tech, you are willing to get assigned. Like, let's say you sell sell 180 puts. Don't do it like you did for Google, like at around $90, or don't do it too close to the money. If you're gonna go at least like, are you okay holding 100 shares of Tesla at $180? Yeah, if that's the case, then it's totally up to you. I was gonna do 45 days on track around 170. Well, if you don't have any issues holding Tesla stock for like $170, that's fine. It's totally fine, but it's totally up to you. I mean, if it goes to 170, you can always take more credits by rolling it down. It's totally up to you as well. Average hourly earnings is expected at 0.03%. Oh, 0.3%. All right. Yeah, so that'll be important. Average hourly earnings is at 0.3, and I think the estimated was at around like 200,000 tomorrow. That's the estimate, right, for the payrolls. So the 200,000, and yeah, let's see. It'll be fun to see how the Dow Jones correlates with the jobs data, because having a decent jobs data is good for this Dow Jones, but not so good for tech and the sectors in S&P 500. Something to keep an eye out for. Like, there are certain stocks which will outperform tomorrow if you get a stronger jobs data. And if you don't get a stronger jobs data, you'll see the outperformance in NASDAQ, QQQ in particular. Not as safe as healthcare. All right. Noha, let me tell you something. Healthcare is not a safe sector at all, especially biotech. That is something which you need to watch like a hawk, because with biotech, if you don't know when they're going to release their FDA, if you don't know when they're going to release their new vaccines or new research papers and all those things, yeah, one of the riskiest sectors to invest in is healthcare, to be honest with you, because these stocks can move like 300, 400% to the upside, or like these stocks can absolutely get crushed like 60, 70% to the downside in one overnight session. So something to keep an eye out for, especially if you're investing in healthcare stocks or biotech stocks. So the Amgen, LLY, or some of the stocks which are actually pretty good, they are giants in their own field. So these are good price action wise. But if you're investing in healthcare, you got to keep an eye out for all these stuffs, like whatever I said before, FDA approvals, like if they have any new pipeline vaccines on their pipelines, and all the stuff you need to take an eye out for. Is there a healthcare or biotech ETF one can watch? Yes, you can. For biotech, it's XBI. That's the ETF which tracks all the biotech stocks. And for healthcare, I think it's XLV. Yep, there we go. XLV is healthcare. So XLV for healthcare and XBI for biotech. Let me just post it in the comments right there. XBI, biotech, and XLV, healthcare. So these are the sectors which tracks the healthcare and the biotech sectors, both of them. So if you guys want to take a screenshot of this, let me show you. So these are the different sectors in S&P 500. Now you can, what the fuck is Zoom doing here? Yeah, you can go ahead. You can go ahead and take a screenshot of this. So these are the different sectors. XLK is technology, XLU is utilities, XLP is consumer staples, XLB is materials, and XBI is biotech, XLF is financials, XLV is energy, XLI is industrial, and XLV is healthcare. Can you please take a look at Quest Diagnostics, and what entry price would you recommend? Quest Diagnostics, let me see. Oh, right, so let's see. Right, so this is actually a not so bad looking chart, to be honest, but let me see the daily. They have a resistance at around $147 to the upside, and currently they are above all the moving averages. The 20 is curling up, but it's above the 5-day moving average as well. So if you want to go long on this stock, I would wait for it to have a decisive break above 147. If it breaks out above 147 and then like start closing candles above it, then you can take the trade to this gap fill at all the way to 157 to the upside. So 147 is something to keep an eye out for. So if you break above it, then go ahead. That's a pretty decent risk to reward with stop losses at 145 or something. So yeah, so these are the different sectors. You can see today utilities was green, materials were green, energy is green, industrials were green. All the other sectors were down. These are the sectors which actually outperformed today. Even though the SPY was down like 1.5%, there were sectors which were actually green within SPY, within S&P 500. It's the tech space which got taken to the woodsheds today. XLK is down like almost like 3%. I mean, makes sense with Apple, Amazon, everything is getting hit. So something to keep an eye out for. So these are the different stocks and Dow 30 components. So something to keep an eye out for as well. Right, so if you guys have any more questions, let me know, or else go ahead, check out the Discord, check out the Patreon, leave a like, subscribe. If you guys have any more questions, let me know, or I'll see you guys in the Discord server. I'll hang around here for a bit. So let me know if you guys have any questions. So always, to recap the stream, risk management, always keep an eye out for it. And look for relative strength, very important. And to not blindly buy downtrend stocks without having a proper risk management to it. Always protect your profits. If you made a lot of money, protect the profits, take it to your bank account, don't leave it in your brokerage to try to double down and make more money out of it. So most of the time it doesn't work out. So be disciplined, and if you guys need the risk management video, check out my channel. It's over there. Like I have explained in details about this 1.2% rule which we spoke about before. There's a detailed explanation for it in my channel, the video title named Risk Management. So go ahead, check it out. And thanks, Maria. Fantastic information. Great points. Appreciate it. Cyclicals and defensives did the heavy lifting today. Exactly. And industrials as well. The CAT and dairy actually outperformed. I think the Dow 30 didn't go down a lot because of Boeing, CAT, McDonald's, Honeywell. And yeah, so those were the stocks which held up on Dow 30. Bank of Nova, SoftBank. All right, can you break Nvidia? How can I break what's already broken? Right, so let's see. Right, so Nvidia, like it has a declining 50-day moving average, not a good sign. At least they closed above 133, that is a good sign. So leading into tomorrow, something to keep an eye out for is Nvidia closing above 131.85 and Nvidia not losing $130. They shouldn't lose $130 no matter what it is. If they lost 130 again, this is gonna go down all the way again to run a test to $116, which was the lows. So leading into tomorrow's price action, if you're long right now, 130 should be your stop losses. If you're buying shares here, 130 should be your stop losses. Breaking under 130, get out of it because we are gonna go and make a new low. But until 130 is holding, Nvidia can run all the way to run a test to the 141 level, breaking above 145, open doors for 150 and change. So as long as 130 is holding, that is. If they gap it down under, let's say like the futures opens tomorrow, like down like let's say 0.5% or 1% or 2%, and then the Nvidia opens under like 130, yeah, time to run the other way. So what else? BNS. What's BNS? Is it trading in our... Oh, NYC, right over here. Are you long on the stock? I don't understand. Like, it's a terrible looking chart, and if you're gonna go long, the same advice whatever I gave for Amazon, same advice whatever I gave for Meta. It has a huge gap over here all the way down to like $43. If they break the lows, they can come down to fill it, and when they fill it, doesn't mean that they can't go any lower. They can go much lower from where they are at the moment. It's the same advice. If you want to long-term investment or whatever it is, if you want to go long on the stock, I don't know anything about the company, but I look like bank, no, it looks like it's financial sectors. So if you want to go long on it, as I said, with the Microsoft and Amazon or Meta, always buy an in-the-money put as a hedge. If you're buying 100 shares at $47, buy a $50 put like 3 or 4 months out as a protection to that 100 shares. So that $50 puts will have a delta of like 80 or 85, and your 100 shares will have a delta of 100, right? So let's say if it goes down like to 46 or 45, you'll be losing $200 in your shares. But your long-term puts, whatever you're holding, they will make like $170. So technically you're only losing $30 compared to that of the 200 with no protection to the downside. So it's a win-win. So always get a protection if you're trying to bottom fish the stock to the which is in a downtrend. It'll protect your portfolio, and it'll also reduce the overall risk of your investment. The good entry will be like $46. You can take the risk there. And if they break 46, I mean, that is with the protection on $46 with an in-the-money put at 50, in-the-money $50 puts like 2 or 3 months out. And if they break $40, it can go all the way down to fill that gap at 43. Breaking under 43, we can see $40. Breaking under 40, we can easily see run a test to the lows at 35. For Netflix, you reckon it's a good shot? Any tech is a shot at the moment, to be honest with you. None of them are actually looking good. No, it's not a single tech stock is actually outperforming. Right now, it's coming in contact with the declining 200-day moving average. If they break 267, they can come down. Tomorrow, if you take a look at it, they will just like come all the way down to 262 and then hang around between the 200 and dance around between the 200 and the 20-day moving average. Depends on where they close. They might just close the day flat and then park it about 267. So if they break under 267, yeah, they can come all the way down to fill this gap. For that to happen, the 20-day moving average needs to be broken. So they can come down to run a test to 255 and change to the downside. Something to keep an eye out for. So it looks like a clear shot, like they couldn't break about 300 and they tried multiple times, failed, and then came all the way back down flushing. So let's see how the futures open up. Something to look forward to. If the Dow Jones, if we get a good employment report tomorrow, we will see a complete 360 in the markets. So something to keep an eye out for as well. We can see like 3% or 2%, 2.5%, 3% day tomorrow. Same with the opposite. If we get a hotter than expected jobs data, expect the same type of tape like which we saw today. Some sectors will outperform, other sectors will completely pummel lower. All right, thank you so much for joining. Check out the Discord, check out the Patreon. Link is down below in the description. And I'll see you guys in the next live stream. Appreciate it.